All right, welcome back, everyone. The Dow down about 1.25 points. What took us off our worst levels was an indication that's at least signaled by Larry Kudlow, the White House economic advisor, that a partial deal is doable and is not necessarily dead on arrival here. So the China trade talks, which we call for structural reforms and everything in China and how they get information and intelligence and all of that, that might wait on a back burner as we do this. If so, it would be a 180 for this White House that wanted a comprehensive across-the-board deal. Now, all of this is conjecture. It is based largely on those Larry Kudlow comments to the Wall Street Journal's Jon Hilsenrath on the significance of this. What do you think?
Well, so, Neil, I mean, the Chinese have been talking for several weeks now about narrowing the scope of the negotiations with the U.S. They're not buying into the idea of major structural reform of their economy, reining in, for instance, their support for state-owned enterprises. But it looks like there are pieces in place where the two sides might agree to at least calm things down a little bit. You know, the Chinese, as we're reporting today, have already been increasing their purchases of U.S. soybeans. So one piece of a potential agreement is increased imports of U.S. agricultural goods. The Chinese have also signaled that, you know, they're willing to look at changing how they enforce intellectual property rules. So that's something that's gone back several months. So that could be a piece of it. You know, and maybe they take these steps in return for the U.S. backing off on threatened tariff increases. You know, October 15th, there's another round of tariff increases coming, and then there's yet another round after that in December. So maybe they agree to some kind of de-escalation that doesn't resolve the whole conflict.
Well, the irony would be that this is a deal that probably, if it comes down to what you outlined, that could have been scored a while ago. But everyone was waiting to see if a more comprehensive one to the president's liking that addresses intellectual property and all of that could be scored. Now, if that is out, I know the Wall Street view, any deal is better than no deal, and maybe that wins out for the day. What do you think are the implications of such a deal?
You know, Neil, I don't know if I agree with this idea that any deal is better than no deal, because frankly, you know, what's holding business back right now is this uncertainty about the trade landscape and how it's going to play out. And if they do some kind of partial deal where there are still tariffs in place and there might be more put on down the line, I don't think it necessarily reduces that uncertainty that's holding executives back from investing right now.
I think you're right,
John. And the latest economy.
I'm sorry, my friend, but the latest reminder that was this Houston Rockets general manager who had to apologize for a tweet supporting the Hong Kong protesters, and then everyone jumping ugly about it because don't offend China, don't offend China. Now, we thought we had progressed from that, but this was a clear reminder, no, we haven't.
Well, you know, this brings, you know, this whole negotiation, it shows how it goes beyond just trade and reform of the Chinese economy. You know, the president is embroiled right now in an impeachment process here in the United States. He's also brought the Chinese into the question of whether they should be investigating the Biden family. The Chinese have, you know, a crisis on their hands in Hong Kong with civil unrest. And those issues, you have to think, you know, I think for the negotiators on the trade front, they're trying to put them out of the picture. But I think for the top leaders, for President Xi and President Trump, those things will weigh into things. And, you know, there are a lot of milestones in the next few weeks, including potentially a meeting in November where we have to see how those side stories play into their overall thinking.
It just makes you wonder, and I know you've reported on this a lot, that you know, U.S. interest to do business in China and to continue doing business in Hong Kong, where, of course, we've had these protests, they'll do anything but try to bring on the wrath of China because they all of a sudden know their business is screwed. A lot of other business opportunities are hurt, and even in the case of a professional basketball franchise, that is held into question. So we still kind of suck up to them, don't we?
Absolutely. You have to remember that American business, American multinationals have spent the last quarter century building a manufacturing footprint in China. It's their, their main source of production, and also doing everything they can to tap Chinese consumers, which is this large consumer base and one of the fastest growing consumer bases in the world. For countries like General Motors and Apple, it's a huge area for business and for the NBA too. So, you know, American companies are kind of stuck in the middle of this conflict between American workers, who President Trump is siding with, and the Chinese. And, you know, American business is not in a good place right now.
So we managed to get more soybeans sold, and some other things hopefully will be good, but some of the core issues, not so good.
Well, and on the soybeans, let's not forget, we were selling the Chinese a lot of soybeans, and they've cut back on how much they purchase. So you have to wonder if they're just going to, you know, ramp back up their agricultural imports to where they were. And we might be asking ourselves in a couple of months, where did this all get us?
Yeah. All right, John, thank you very, very much.